Welcome back, ladies and gentlemen, and now we need to move on with the modeling our various tables for financial statement, balance sheet and cash flow. And we said before you make or rather before you generate a cash flow or balance sheet, you must have done an income statement. So we'll start with modeling an income statement, then we'll move on to balance sheet and cash flow. So I said earlier that we'll be modeling our tables using table constructor. So we'll click on this modeling tab, then we'll click new table. So the new table here will be given a blank page, and this is a place now we need to do our coding using DAX, and then we'll be using variables. But before we do our coding generate any income statement or financial statement, there are a lot of factors we need to consider before we start modeling our table for income statement or balance sheet. So the factors I'm talking about are, let me give you with an example of having a parent company, and the parent company is having maybe subsidiaries, or we have company A and company B as a part of the group of companies of a larger company, or rather of a larger group, and then within each and every company we have different branches. So here we are assuming that the company A is having branch 1, 2, 3 up to 4, and then company B is also having branches 1, 2, 3 up to 4. And then again, when you want to generate maybe a balance sheet, cash flow, or income statement, you're supposed to do it maybe monthly, quarterly, or yearly. And then maybe you could be having quite a number of years that you want to model. Let's say maybe you want to create a DAX code that can run for maybe 2 years, 3 years, or 4 years. So you have to consider all those factors. So when we come up with a table model and we'll be using variables, it then means that each and every variable has to be different from all the branches, and it has to be different from all the companies. And again, we'll consider the parent company as a branch on its own. So here we might be having, three companies: the parent company, the company A, and company B, also with the different branches. So we have to consider the fact that we want to generate an income statement that will be analyzed monthly, quarterly, yearly, branch-wise, and then company-wise, and then again can consolidate all the figures to a single group. So let's go back to our Power BI desktop, and now we have our we've created a blank page here for a table, and we need to model our income statement instead of us doing it one by one, because it is quite a process. So I'll show you what I did when I was modeling income statement, balance sheet, and cash flow using a table constructor under the modeling tab. So let me just click on this P&L item. So this is what I modeled that as a P&L table for P&L visuals. So let me click on this P&L items, and then again now you can see what we have as P&L and L items as code, and also P and L items in terms of values. So this is the table model of P and L items, rather the table model for P and L items. Let me just click on this again. So this is what we have as a table model for P and L items that have been modeled using a table constructor. So here we have index, we have category 1, of which you can see I have revenue, total revenue, cost of sales. So I've used the layout of the P&L layout that I had shown you earlier, and you also have category 2. And category 2 are the details of category 1. And then you also have a month column, you also have year column, and also we have branches. And then of course we have the values. So before we explain further on this table that has been modeled using a table constructor, let me just show you the coding, that what we did on the coding. So the coding, I've used various variables, and I started from the year 2017 to March 2018. So here I have freight sales as a variable. So I'm starting with branch A. So branch A, we have here freight as a variable, rather freight as a revenue, and I'm making a variable out of freight as a revenue. So we have freight, and then I have A1 here, just mean this is branch A, and DC12 mean this one is December, the month of 12, and then within December we have quarter 4, or rather December is within quarter 4, and then the year is 2017. So now you can see I have freight as a revenue item, then I have A1 as a branch, then I have December 12 as month, so it is month and month number, and then I have quarter 4 as in terms of quarters, and then I have the year 2017 in terms of years. So I've used calculate sum x, and then I'm sourcing all my data I'm sourcing from the trial balance. So you can see I have a table here for TB, and then I have the column for TB value, and then I also have a column for TB category, and then here now we are using filters. I'm trying to filter the TB table with the category which is equal to P&L item, and then the TB category 2, I'm considering the revenue. So these are still filters, and then I'm considering category 3 from the TB still. And this is the column for column 3, then the trial balance, and then I'm filtering freight sales because my first variable is for freight sales. And then again I'm doing branch A, so I'm also filtering within the trial balance the branch A, and then we are in the period of December, so I'm also filtering within the trial balance the month of December. So I'm using the month name, rather the date month name is December, and then we also filter the quarter, and the December is within quarter 4. So date quarter is equal to quarter 4, and the date here is 2017. So I've done this for all the items for revenue, cost of sales, operating expenses, tax, until we come up with the earnings after tax. Then from here you can see we have express sales. So the same procedure that I've used in the first variable is the same procedure that I'm using in the second variable. So in the second variable, what I'm changing here is express. In terms of variable, I've just written express, and then the revenue item, rather category 3 now is express sales. That's what I've filtered out, and then the other filters remain the same. So what we are changing here is just the express sales as a variable, and the filters within category 3 I'm filtering express sales. Then again the same applies to launch service sales. So the category 3 is launch service sales, and then the variable here is launch service, and then it is for branch A, the month of December 12, and then quarter 4 within the year 2017. Then I've done that for cost as well. The same procedure that I've just used, I've done for cost as well. For now, cost, I've just changed the naming of the, rather I've just used the freight costs instead of maybe express sales or launch service sales. I've used freight cost, and then the category 3 here now is freight cost, and then the branch is still the name, rather the date for December is still December, and then the quarter is still quarter 4, and the year is still 2017. So let me just take you back a bit, and then here we have a variable for total revenue, and then our total revenue, now we are adding the 3 variables for freight sales, express sales, and launch service sales. So we've added them down here, and then when we go down after doing the variables for cost of sales, and then we also need to get the total cost of sales. So total cost of sales, again we are adding the variables for all the different categories of cost of sales, of which we have freight, we have express, we have launch services. And then after that, now we need to get the gross margin. So our gross margin here will be the variable for total revenue minus total cost of sales. But remember how we are doing our variables. Like now I've written gross margin, but it's for branch A, and then the month is December, the quarter is 4, and the year is 2017. The same applies to all other variables when we are doing generating our values for each and every variable. And then also have other income, the same principles applies. And then now we'll go to operating expenses, of which operating expenses we have administration, we have employee expenses, we have marketing, we have professional expenses, and then we also have transport and travel. Then after doing the variables for all these operating expenses, we need to get the total operating expenses. So our variable for total operating expenses is equal to the summation of the variables for individual operating expenses. Like now you have here our total operating expenses for branch A, the month of December, quarter 4, 2017. It's administration for branch A, December, quarter 4, 2017. And then we also add the employees expenses, we add marketing, we add professional expenses, and then we also add transport and travel. And then after getting our total operating expenses, now we need to net off total operating expenses from our gross margin. Remember, we had done our gross margin up here. So we need to net off from our gross margin, and then maybe from the total of gross margin and other income. So here we'll come down here and get earnings after, or rather earnings before depreciation, interest and tax for company, for branch A, the month of December, and for quarter 4 2017 is equal to our variable for gross margin, and then plus our variable for other income, and then we subtract, or rather we net off the total operating expenses. So this will form part of our earnings before depreciation, interest, and tax. And then down here we've done also the variable for depreciation, and this still is for company for the month of December for Q4 and the year for 2017. And then the same principle that we applied up here for the variables, we applied down here for depreciation. We are sourcing our numerical values and text values from trial balance. And then you can see the TB category 1 is equal to P&L because we are still working on P&L items. And then the category 2 is depreciation and amortization. Category 3 now, which is the final detail of category 2, is depreciation. Remember, within depreciation and amortization, we have depreciation as a separate line item and amortization as a separate line item. And then we are still working on branch A, and then the date is still December, and then the quarter is Q4, the year is still 2017. And then we move on to now getting amortization. We use the same principles that we've used in depreciation as a variable, and then we'll come down here and get the total depreciation and amortization, of which we'll be adding depreciation and amortization variables. And then we'll be moving down now to getting our earnings before interest and tax, and this is still for company A and December and Q4 in the years 2017. So we'll get our earnings before depreciation, interest, and tax. We subtract depreciation and amortization, and then we'll be getting our earnings before interest and tax. And then after that, we need to get interest. We need to calculate the variable for interest, the value for interest, that is. And then the same principle that we used here, where we source our data from trial balance, is the same we apply for interest. And then we'll get our earnings before tax by subtracting the interest element from the earnings before interest. And then we'll also get our tax as a variable, and then down there we'll get our earnings after tax by subtracting the tax value from the earnings before tax. Then that one now we'll have done the income statement for branch A within the month of December 2017. So the same principle that we've done for branch A within December 2017, we'll do for branch B within December 2017. And then we'll also do it for branch C within December 2017. We'll do as well for branch D within December 2017. And after doing for branch A, B, C, D for December 2017, then now we can move to 2018 January, and now instead of writing 2017, we'll change we'll be changing the variables. The variables will be changed. The years within the variables will be changed to 2018, and then the month will be now J1, but it's still A1, so we're still working on branch A. And then the quarter will be Q1. No, it's not Q4, it's Q1 within 2018. And then the same principle applies until we go to branch B. Now it is B2, because it is branch B, and then the month of January, then Q1 in the year 2018. Then the same applies to branch C. Now it is freight C3, which is branch 3, and then the branch 3 is branch C, and then it is January 2018 Q1. And then we move down up to branch D, and after doing the whole of January, now we can copy the whole code for January for 2018, and paste it in February 2018. But now what will be changing is the month, because the month is February. By changing the month to February for each and every variable, we'll have changed everything for the from January to February 2018. And then we'll do the same with March 2018. We'll copy the whole coding for January for branch A, B, C up to D. Then we'll change just the variables, the part of the month of within the variables. Instead of February, now we'll use March 3. So we'll have changed everything for the coding within the month of March 2018. So by doing that, we'll have done the coding for 3 months, January, February, March. We'll as well have done the coding for December 2017. And then down here now you can see what we've done as variables. But let me just take you back to the coding. After doing all the variables, then now we need to come up with another variable to generate the income items. So here I have one here for index. I have the next value here for category 2, which category 2 was revenue. And then category 3 here we have right sales. These are the final details of category 1. And then we have, of course, the month, which is December. Then we have the year, which is 2017. Then we have the branch, which is branch A. And then now we are referencing the variables that we made up here. We are referencing the variables so that we can get the values of the freight sales for branch A within December 2017. So the same principles has been applied until we reach earnings after tax. So we start with the revenue, move to total revenue, then cost of sales, total cost of sales, then we go to gross margin, then other income, then we go to operating expenses. And remember, each category has subcategories. So like now here revenue, we have revenue, then we have freight sales, express and launch service sales. Then we get our total revenue. When it goes to cost of sales, we have freight cost, express cost, launch service cost. Then we get our total cost of sales. The same applies to operating expenses and tax. And from there, we'll move on until we get our earnings after tax for each and every month, each and every branch, each and every quarter, and each and every year. So we have for branch A, we have for branch B, and branch C, also branch D, and we also have for 2017 and 2018. Then after getting the income items down, we need to filter out the income items now. So filtering out the income items will give us the table down here. Let me just minimize the coding window. So this is the table that we've created with our DAX coding within the table constructor. So we have here category 1, category 2, we have the month, we have year, we have branch, and also we have values. And we also have index. So what I did not do here is I did not give the index for each and every month. It's like now we have January. January should be indexed 1, and February 2, March also 3. So this is where I was telling you I came up with a quick fix where I had a month index. So I created a table so that I can link with this P&L items to sort out the months in order from January to December or from January to March 2018. So this is the modeled income statement that I've done within the table constructor. Then we've done for branch A, we've done for all branches A, B, C, and D. And then the year we've also done from December to March 2018. And then we've also done for all the items within the P&L layout. So this is a modeled table for income statement. So this is the table that we are supposed to use for doing a visual for P&L statement. And then the same principle that I've applied here is the same principle that I did apply in balance sheet. So let me go to balance sheet items. Balance sheet items. So where's my balance sheet items? It's here. So here again, let me show you the coding up here. And the coding started from variables the way we did in P&L items, and then we are starting with current assets. So our current assets, we have loan and advances, we have sundry debtors, we have cash and bank, and we also have prepayment. Then we'll also come down here and get our total current assets, of which we need to add the single items of or single ledgers within the current assets. So we have the variables, and we're getting all our values from balance sheet, rather trial balance. We have TB here, value. Then the category is B as item. Remember when we were doing the P&L, the category one was P&L item, but here category is BS item because it is a balance sheet item. And then we have our loan advances, and then we are doing December. And then now with the balance sheet, we don't categorize them in terms of, or rather I've not categorized them, I've not filtered in terms of branches, because the balance sheet items are being used by all branches. You cannot separate branch A, branch B to be having different assets, because they have not been categorized as companies. They're just branches, but they are branches of single company using the same capital items or capital assets and using the same capital. So the balance sheet items, we cannot filter the branches. So here we just filter the year or maybe the month. But so like this one now we've done for December and the year 2017. So the same principle has been applied until we come up with our total current assets, and then we also have our total current liabilities, and then we have net current assets, of which we net off the total current liabilities from the total current assets. And then we also have our tangible assets. So tangible assets, we start from vehicles. We have furniture and equipment, and then we also have computer and electronics. Then we get our total non-current assets by adding the variables for vehicles, furniture, and computer and electronics. Then we get our total tangible non-current assets by adding the total non-current assets plus the intangible assets, and then our total assets as of December will add the net current assets plus total tangible assets. And then we move on again to capital and liabilities, of which capital and liabilities we have long-term loans, and we also have capital. So we here have category 1 as capital employed, long-term liabilities, and we also have capital employed as capital. So we have filters here for long-term liabilities, and we also have filters for capital, and then the year is December. Rather, the year is 2017, and the month is December. So we've also done that for reserve, and the same has been applied on total capital employed, and we've added capital employed plus capital employed liabilities plus capital employed for capital, and then plus capital employed for reserves, and then we also have earnings after tax for the year 2017. So this was for 2017, and then now we are also doing for 2018, and 2018 we are doing from January, we are also doing for February, and then we are also doing for March. Then after doing the variables for each and every balance sheet item, then now we need to do another variable for balance sheet items that will reference the variables that we've done here. So here you can see we have the index, then we have category. You have category 1, then category 2. Category 1 is the main balance sheet items like current assets, total current assets, current liability. And then we have category 2, which are the sub details of category 1. And then we have the month, and then we also have the indexing of the month, and then we also have year, and then we have the values. So the values we are referencing the variables that we did up here to get the values, and then we go down until rather this one we do for January, rather we do for 2017 December, we do for 2018 month for January, and then we're also doing for the month for February, and then we've also done for the month of March. So here in balance sheet you can see I've indexed my months. So you can see March I've indexed 3, February I've indexed 2, and the January I've indexed 1. So it's easier to sort in terms of month. When I want to analyze my balance sheet in terms of months, it is very easier to sort them out. Then again down here now we need to filter out the balance sheet items such that we can come up with the table down here. So let me just try to minimize this code, and then now you can see we have our table here for balance sheet. We have index, we have index column, BS1 column, BS2 column, then BS1 column is just the main category of the balance sheet items, and then the BS2, the subcategories of BS1, and then we have period, and then we also have the indexing of our periods, and then we have year, and then we also have values. But now you can see I've indexed December as 1 because we only had the one period within December. So there was no January, February, March up to November, so I only had December. So I just indexed it 1. And then we have all this until we get our capital employed and net current assets. So this is how I've modeled the balance sheet. And the same principle I've also applied for modeling my cash flow items. So cash flow items, We started with the retained earnings. So within the year 2017, we only had values for December 2017. Then the company had made losses, so I considered the negative reserve and the retained earnings that were negative plus the earnings that they got in December 2017 as total loss within that year. But that one will come into the visual, or rather we now start generating the visual for cash flow. So here the same principle that I used in generating the cash, or rather the balance sheet and income statement, the same principle that I've used here. So here you can see I have retained earnings for December 2017, and it's been calculated here using calculate and some X, and then I've filtered out retained earnings, and then rather I've filtered out earnings after tax, and then I'm adding now the retained earnings to get the total figure for my retained earnings for the year 2017. Remember, this is a cash flow, and then within the year 2017 we had losses of about 2 million, and also we had made a profit within the December 2017. So I've added the retained earnings, the losses, plus the earnings that we had in 2017. So this is what I'm considering as the retained earnings, or rather the net loss for the year 2017. And then again, when we are doing our cash flow, we always add back the depreciation, because depreciation is a non-cash flow item. And then you also need to add back the changes in bad debts, or rather provision for bad debts, and also the bad debts, the changes in bad debts. So this one will be adding back because they are non-cash items, and we also have accrued expenses, of which these ones are also the non-cash items. So we need to add back to our net income. So I've created the variables of the non-cash items, of which we'll use them as adjustments within our cash flow item. And then down here I'm done a variable here for adjusted net income, of which I'm adding the retained earnings. Rather, I'm adding the retained earnings plus the depreciation, and then plus the changes in provision for bad debts, and then the changes in accrued expenses. Then when you go down, we also have changes in receivables. So here we are assuming our receivable in December 2018, or rather at the initial stage we did not have the receivables, or rather within the year 2017 we just did our operations within December 2017. So the starting sundry debtors was 0, and then now we are subtracting the opening figures, which was 0, from the final figures as at 31st December 2017. So the same principles has been applied for both receivables and receivables and payables. So we have here creditors, customer advances, we have prepayments. So this forms part of the changes in working capital. So when I come down here, you can see I have net cash from working capital. So I'm adding changes in receivable plus changes in loans, changes in prepayment, changes in creditors non-trade and creditors trade, and then changes in advances plus changes in trade partners. Then down here I'm having net cash from operations, of which it is adjusted net income plus net cash from working capital. So the same principle has been applied, the same principle that you apply when generating our cash flow in Excel is the same principle that I've applied in modeling my cash flow within Power BI using a table constructor. So I've done for 2017 and I've also done for 2018. Then 2018 I've done it month-wise. So we have January, we have February, and then we also have March. Then we also need to come up, now we need to do another variable for having the values that we've generated up here with our variables. And then now we have our first column here is indexing column, and then the second column here is the main cash flow items within the cash flow table, and then the third column here is the subcategory of the main cash flow items. And then of course we also have the month, we have the year, and then we have the values. So we've done that for January, February, and March. And then now down here we have to filter out our cash flow items. And then down here is the table that we have for cash flow items. So you can see now we have net income, we have adjustments for depreciation, accrued expenses, then we have adjusted net income, then we have working capital changes, and then the working capital changes, we have sundry debtors, loans, payments, creditors, and trade, and customer advances, creditors, trade, and trade partners. And then we also have changes in net working capital changes. And then down here we have also investing activities. We have net cash flow from investing activities, we have financing activities, and we also have net cash flow from financing activities. Then we have our net cash, or rather net cash and cash equivalents at the period end of December. So after doing for December, we done for January, and then the same applies for February and March, and that forms the cash flow items modeling using a table constructor. And then from after modeling our tables here for P&L, cash flow, and balance sheet, so now we need again to go back to our data modeling so that we can connect the tables that we modeled with the previous data tables that we had connected. So we'll come back here and link the balance sheet items, P&L items with the month index. You remember I had said earlier that I use the month index as a quick fix for arrangement, or rather for sorting the months within my P&L and balance sheet items. So if you check here, I have P&L layout, and I've connected with the P&L items has been connected with the P&L layout with the index column. And then again I have month index connected with the P&L items using the month column. And the same applies to balance sheet items. We've connected our balance sheet layout with the balance sheet items using the index column for both BS layout and BS item. And the same has been applied on month index and balance sheet items. The connection has been between the connection has been used We've used the month column to connect the month index and the balance sheet items. And then now the cash flow items did not do any connection because it was not necessary. And then also have a few measures to do my visuals. So from here again, now let me take you back to data view, data view but report view. Then from here is now where now we are supposed to do our visuals. And I've done quite a number of visuals here. We've done monthly income statement, and we've done branch income statement. We've done cumulative balances, yearly income statement, balance sheet. We've done revenue. We've done cash flow. And then we have some supporting visuals for our financial reports as cash flow, balance sheet, and income statement. So let me stop at that, and then I'll come back with another video where I'll show you how I've done the measures and how I've done the visuals for income statement, balance sheet, and cash flow.